Hello guys, how are you doing? This is Offensive Aloy, your mentor, analyst and trader at Forex Chasers. So my role in Forex Chasers is that I'm gonna be helping students to achieve what they wanna achieve in the markets. So I'm gonna be having one-on-one sessions. I'm gonna be having afternoon and evening and morning sessions. So you guys, you should be ready. So right now as we speak, I was preparing US 30. Now I'm gonna make a market breakdown of US 30. Then I'm gonna shoot the second video coming back to you guys with the results on what actually happened on US 30. Please don't forget to like, subscribe and click the notification button, because of there's gonna be a lot of more content coming. So if you guys have any questions or anything, you can join our Telegram channel and then you'll hit me up from there. I hope everyone is well. So today I'm gonna be looking at the US 30. I'm gonna be looking at the US 30. This is a 4-hour time frame. So what's actually happening on the 4-hour time frame? I noticed something. We have an uptrend, and here we have a first touch. Let's go up, and here we actually have the second and third touch. They are both in one place. So it's the 4-hour time frame. That's what I was looking at. You see, never mind this here. This, I think that was actually a fake breakout, because remember you have to have 2 or more touches so your trend line can be valid. So it's 1, 2. So we'll see when the market come here for a third touch. Is it gonna go up or is it gonna break down? But for now we're looking at this one for the 4 hours. So this is our first touch. Second and third touch are on the same place. So I'm actually gonna remove this now. I'm gonna remove this trend line because on the 1 hour it doesn't look good. So I'm gonna go to the 1 hour time frame. So on the 1 hour time frame, it's like this. Let me remove this. It looks like this. So what's actually going on here? This is another structure. So I'm looking at this right now. It's a first, second, third, and shot up. So I was waiting for the market to have a first, second, and third touch, but unfortunately, it seems like the market can't break this resistance. And you can see the rejection candlesticks. So that's when I saw this opportunity that we can take a trade here and take our first take profit here, and then the second take profit should be here. Take profit should be here. The reason for the second take profit being here is that previously the market couldn't break this resistance. You see, it couldn't break this resistance, but it finally broke this resistance and shot straight up. So the market might come to this support and come to retest. But for now, our first take profit should be here, because of this is actually the 90% rule. So that's why I wrote it here. Our first tipping. This is gonna be our second take profit. So I hope you guys are understanding exactly what I'm saying. So if you missed this one here, you can still wait for the breakout here and wait for a retest, and you can enter the trade to go down with the market. Or if you're comfortable getting in the trade here, it's still a safe trade as long as your stop loss is well and everything is well. So I'm gonna come back with the results of the video of what actually happened to the market. I'll come back later with the second video, but for now I hope you guys understand and see everything well. Thank you for watching the video.
What it's doing.
It must be out. Hey, oh, you want to hold it?
Must be out there. Let's just go out. Out.
Sniper.
Oh. This is madness. It's madness.
Hey guys, this is Tremaine Adams, your Forex Chasers mentor, analyst, and trader. And in this one, I'm essentially just going to take you through a small walkthrough of the process of how we book live sessions and one-on-ones with our clients. Hey guys, so we're actually going to get into booking a live session with one of the members that requested. So I actually can update myself on how far the members are with their progress. So I see that this member is doing quite well going through the course. So essentially we're just going to phone him and find out what exactly does he need help with on the one-on-one live session. Hey, Andile. I'm cool, man. This is Tremaine from Forex Chasers. I'm basically just phoning to follow up with your one-on-one that you want to schedule. Awesome, man. So essentially, when are you planning to have the one-on-one? What day would you like to have this one-on-one? Okay, and do you have a time in mind? Okay, okay. I think at 11 o'clock we're going to have the public live call. So yeah, if it's going to be around 11, then it would have to be after that. Okay, no problem, that's fine. And then as well, I'd just like to ask you, what are you looking for specifically? Like what areas would you like the mentor to touch on? Yeah, I can see. Yeah. Okay, no problem then. I'll definitely just let the mentor know that's gonna be hosting you. By my assumptions, I think Funny Luck is gonna be your host. And yeah, then I'll just confirm with him and then let him know that Monday around 12 we're gonna have a live session with you.
Hi guys, my name is Tabani Mamba. So I'm a mentor at Forex Chasers. We are about to watch a live video with a member which is a mastermind. So guys, I'm about to have a live session now with a member at Forex Chasers. So how are you, my guy? How are you doing? Hey mastermind, how are you doing? You good, man? Yeah, I can hear you, man. You good? Yeah. So man, tell me what's your problem and what is it that you need help with? Yeah. Yeah, I can hear you. Entries. Okay, bro. So let's just dive in deep into entries. So we know that we are trading patterns and on the stuff. So let's just say now we have an ascending trend pattern on. Let's just say now we have or maybe a rising much, it doesn't really matter. Let's say now the market, here's the price, is coming in, is making the first touch, making the second touch, and here at the third touch, you start to see price doing what? Doing an ascending type pattern inside this one big type pattern. So there are two ways of which we can take this trade. So now we're just gonna take it here at the top after it has given us what? After it has given us the candlestick confirmation, or we can wait for it to break into these areas and form what and form some commitment. Then we're gonna be taking it in these areas. So now let me just make it a bit more simple. So now let's just say we are in the inside of what? Of the smaller pattern that has been formed. So here at the third touch of what? Of this smaller type pattern that has been formed here, this is where you're going to be taking a trade to the downside, or you're going to be taking it here at the breakout once it has formed what? Once it has formed commitment to the downside, then we're going to be targeting our 90% rule. But then, if let's say now you missed these both two trades, so how can we go about this one now? Let me just remove everything here. So now let's just say the market has moved all the way to the downside. Maybe you see the market here. So what is that we're waiting for? Wait for market to just form what? Form small correction here. Then after this commitment here, there are two possible ways of which you can take it. You can either take it here at the top, or you can take it here at the break of what? Of this continuation pattern. So let me just grab this out, short position. So you can just take it here at the top. Obviously, you remember before we take our trade, we look for candlestick confirmation. So with our candlestick confirmation, you can just take it here at the top, targeting all the way to the downside to our 90% rule. Or you can take it here at the break of what of the break of the continuation pattern, having your stop loss just above what just above the continuation pattern, and then targeting all the way to the 90% rule. So now let us before we can look at the possible ways, let us go and look at for candlestick confirmation, which candlestick that we look at when we are taking those trades. So for now, I'd want us to just focus on two candlestick formation, of which one is the rejection candlestick. So what is the psychology behind this candlestick? So this candlestick, it opens here. When it opens here, it's pushed to the upside. Buyers, what buyers are doing, they are pushing price to the upside. But when they get into this area here, so it means there are sellers sitting there waiting to push what? Waiting to push the price all the way to the downside. As you can see, they do push the price all the way to the downside, and the candlestick end up closing bearish. So this one clearly tells us that now sellers has gained what? Gain momentum. So now, how do you take a trade using this type of candlestick? You take a trade after the candlestick has closed bearish. Then you take a trade. Then you put our stop loss just above what? Just above this spike candlestick, and targeting all the way to the downside. So another way it can happen that the candlestick closed like this and you're still not comfortable with taking the trade. You can just wait for another candlestick just to close the bid what, just to close a bearish, just close below these areas here. So once the candlestick closed below these areas, just gonna take your trade here and having a stop loss just above these areas and targeting all the way to the downside, of which this one we call it what? We call it engulfing candlestick, which it means sellers, they are engulfing what? They are engulfing buyers. Do you get the point? Yeah. So before taking those trades, we wanna see this this pattern being formed inside inside this big structure that we have. We wanna see what this small tech ascending pattern being formed here. Then you're gonna be capitalizing on it using the strategy that I just shared with you. That we can take it here at the top. We call this high risk trade entries and targeting our 90% rule, or you can take it at the break of what of this structure of this small what pattern here, putting your stop loss just above this pattern and still targeting what the 90% rule. But there is another entry of which you can capitalize on. Let me show you. So let's say now the market is coming into these areas. Let me just remove this. So now let's say a market is coming into these areas, it comes impulsively, it doesn't do what? It doesn't do the ascent interpreting inside, but it breaks into the structure. So what do? You wait for market to impulse back into what? Into the structure. Then after it has impulsed back into the structure, you wait for what? For small commitment here, then you're gonna be taking the trade. Even here, there are two possible ways in which you can take the trade. You can take the trade here at the top of what? Of the continuation pattern, or still targeting what? All the way to the downside. Or you can take the trade at the break of what? Of this continuation pattern and still targeting what? Our 90% rule. So you got that, brother? Yeah, you understand now. Okay, so what you need to do, you need to know where to place your stop loss. As I just said now, you just have to place your stop loss just above what? Just above the candlestick, not like just above, maybe count maybe 3 or 5 pips above what? Above the candlestick, so that you'll be safe and give the trade more room to breathe on. And another thing you must be watch out for is fear of missing out. We call it FOMO, fear of missing out. Like sometimes you find already you're taking trades which you find the candlestick hasn't closed yet, and you're taking the trade. That's because you have fear of this is a good trade and I'm going to miss out on this trade. So to avoid that, you just have to wait and see how the candlestick close, because sometimes you can find out we have a rejection, maybe we are looking at an hourly candlestick, we are rejecting, then at the end you find out the candle close is closing bullish one. So what we have to do, you have to wait for candlestick to close and not take the trade before the candlestick hasn't closed yet. Okay, so but I think you have to like go back into your charts and backtest these type of entries. Just like focus on these entries only, just to see those entries and backtest them. Like you can just backtest 100 times, then see which ones you prefer taking. You prefer taking them, and because it can happen, you prefer taking them at the top rather than taking them at the break of what of the structure. So it's all up to you which one works for you and which one doesn't work for you. So for you to find out that, you just have to go back to your chart and do more back testing. Okay, so you can go on that one if it creates a form that tries to track, then you know most of the time it works in your favor. So you can just focus on what works for you and leave whatever that doesn't work for you. So the one that we, so when you accessing the one that we have to take at the top, what are the results on that one? So one thing you should know about the market, brother, is that you don't have to be always trading, especially when you're a position trader or when you're a swing trader. You don't have to take trades every day. You can just find maybe 2 trades a week. That is still fine. Find 3 trades a week is still fine. You don't have to trade every day. So for it not happening every day, it means you mustn't trade. You must stay out of what out of the market, because what you are looking for and what is in your trading plan has not yet presented itself on the market. So for you, the best thing to do just to stay out of the market and wait and see those one that works for you. Then you work with them. Or what you can do if you wanna see or you wanna be trading and you wanna be more active in the market, you can just try to do more backtesting and find out more into detail what is that more works for you and what is that doesn't work for you on daily basis or what, so that you can be more active in the market. But then if you are swing trading, you can just have like 2 or 3 trades a week, then you are good to go. Okay, thank you.